Nice full crowd, too. I always like to see that in November. I think Co-Chair Meredith is on the way. Had a traffic accident that's kind of held him up, so I'll get us started, and then I'll turn it back over to him. But if I will, we'll have the Secretary please call the roll.
Senator Rocky Adams. Senator Chambers Armstrong. Senator Douglas.
Present.
Senator Elkins.
Present.
Senator Girdler. Senator Howell. Senator Rawlings.
Here.
Senator Smith. Senator Storm. Representative All.
Here.
Representative Bauman.
Present.
Representative Bray. Representative Camuel.
Here.
Representative Klein's. Representative Duval.
Here.
Representative Gooch. Representative Gordon. Representative Grossberg.
Present.
Representative Hampton. Representative Hancock.
Here.
Representative Heverin.
Here.
Representative Lewis.
Here.
Representative Lockett.
Present.
Representative McPherson.
Here.
Representative Pollock.
Present.
Representative Rudy. Representative Smith. Co-Chair Carpenter. Co-Chair Meredith.
We have a quorum ready to do business. I do need to get approval of the October 14th minutes. Have a motion. Do I have a second?
Second.
Have a motion and a second. All those in favor signify by saying aye. Any opposed? The minutes are approved. I think we're ready to go ahead and get started with our first presentation. We've got a full agenda, it looks like. So it looks like we've got some folks, Kentucky Farm Bureau. I'm sorry, we're changing the plan here. The proposed mental health parity legislation for the 2026 session. So Representative Vanessa Grossel will be doing that one, I believe, if she's here. Okay, I'm sorry. Representative Wilner and all your party. They'll come up, introduce themselves to the table, and we'll make it all official here. I didn't see everybody on the list there. I apologize. I recognize some of your party already, though. If everybody state their name for the record, and we look forward to your all's presentation.
All right, Vanessa Grossel, House District 88.
Lisa Wilner, House District 35, and a licensed psychologist.
Dr. Sheila Schuster, licensed psychologist, Kentucky Mental Health Coalition.
Nicole Sartini, licensed professional clinical counselor with Bridge Counseling and Wellness.
Thank you all so much. Please proceed.
All right. Thank you, Mr. Chairman, and thank you, committee, for listening to us this morning. The Kentucky General Assembly has recognized mental health as an issue for a number of years, and mental health needs to remain a priority for us. In 2021, with House Bill 50, it required that mental health parity be implemented, acknowledging that mental health was to be treated the same as physical health. And we're here today to discuss fidelity issues with that law, to ensure that insurers are following the law with fidelity, and that proper enforcement mechanisms are in place for those who do not. Unfortunately, we have serious concerns about whether the Department of Insurance has the capability to implement the law as it currently stands. Reports from the department have not addressed mental health parity, nor did last month's department update testimony to this committee. We believe additional legislative oversight is warranted. At this point, we should have already been presented with 2 full years' worth of data via those annual reporting requirements that the bill clarified for insurers that would have given us a lens into whether insurers are complying. The data that we have gathered suggests otherwise. Our proposed legislation gives oversight and enforcement capabilities to the legislature and to the Office of the Attorney General, and further supports consumers and providers with an advisory committee of experts in the field that reports up to the Attorney General. The fiscal note is around $300,000 annually, and I will now yield to my colleagues to outline in detail why this expense and legislation is needed.
Thank you, Rep. Grossel. Thank you, Mr. Chairman, and thanks to the committee for having us today. A couple of things I want to say is that this is a fully bipartisan bill, and that's because mental health care is not a partisan issue, and both Rep. Grossell, Rep. Baumann had mental health parity bills last session. I worked on one, and I'm really grateful for this opportunity for us to work across the aisle on this that affects so many of our constituents. I also want to point out that the bill is watermarked draft, so this is very much a work in progress, and we're really very much wanting your feedback today to bring this back and pass it in the next session. So we have seen significant policy progress on behavioral health parity in Kentucky and federally, but enforcement and the reality on the ground for providers and patients remain a significant challenge. Access to in-network behavioral health services remains significantly less than access to in-network medical and surgical treatment. So federally, there's the 2008 Mental Health Parity and Addictions Equity Act that requires that health plans not design or apply financial requirements and treatment limitations different for behavioral health than they would be for comparable medical or surgical benefits. And yet, those burdens remain both federally and in Kentucky. So there's a really straightforward way to tell whether or not parity is being met. We can look at whether individuals can access in-network behavioral health treatment as readily as they can access in-network medical treatment. And studies show that there are, in fact, significant disparities between access to behavioral health versus medical treatment. So across the country and here in Kentucky, out-of-network use was many, many times higher for behavioral health treatment than for medical treatment. And this creates a significant financial burden for people seeking behavioral health services than for any other types of health care. So this is, in fact, a national problem, and while this problem persists nationally, the problem is especially severe for Kentuckians. So one large-scale study looked at claims data, specifically out-of-network utilization. Findings showed that nationally, people went out of network 6 times more often for inpatient behavioral health treatment than for medical treatment. Meanwhile, Kentuckians utilizing inpatient behavioral health services went out of network 17 times as much as people who needed medical services. Similarly, for outpatient visits, nationally, people are going out of network 3.5 times more for behavioral health services. Here in Kentucky, it's almost 5 times as often. Compared to other medical specialties, Kentuckians are going out of network 30 times, let me say that again, 30 times more often for appointments with a psychiatrist and 11 times more often to see a therapist than for traditional medical treatment. Provider shortages, I just want to say, do not explain the disparities in this particular study. The patients in this study are finding clinicians, they're just not in network with insurers. So the solution is strengthening and enforcing our parity laws, and that's exactly what this bill offers. And I'm going to turn it over to boots on the ground. I want you to hear from a provider who can talk directly about the experience of her practice.
Thank you so much, Representative Wilner and Grossell, for including me on this panel, and to Representative Meredith and Senator Carpenter and the members of this committee for giving me an opportunity to speak from a provider's lens. My name is Nicole Sartini, and I have been a licensed professional clinical counselor for over 15 years, and I am founder and president of Bridge Counseling and Wellness, which is a team of 53 that provide mental health care in the Louisville area. And we've been doing that for over 11 years. I am very concerned about how not having parity has caused issues within our field, because within the last year, we have lost 11 providers to either other fields or to private pay only practices. And that is 4 times as many providers as we've lost in our entire 11 years of practice. And we can trace when this happened. When Humana left commercial insurance, we found that they were the only company that we were aware of, or operating most closely to parity enforcement in our region. And when they left, we lost 30% of profit for the same exact number of sessions. So not only did us as a business lose 30% of our profit, our individual providers also lost 30% of their wages when we're already in an underpaid field based on the level of education that we have. We're also concerned because in addition to the loss of providers because of this reimbursement shift, we're also seeing more frequent instances of behavioral health carve-outs that we're not seeing at the same rate for physical and surgical care. And when those happen, we're seeing further decreases in our pay. And this shakes the stability not only of our business, but also of the clients who are depending on insurance to pay for the care that they're getting. We also have seen just this year at Bridge, at my business, $8,000 in clawbacks just this year so far. And these are not instances where there is fraud. We were actually doing the notes and the coding just as we were instructed to do, and still losing the funding. That means when you have a clawback, that means that the money that you were once paid is taken away from future payments. And we're hearing from our peers who don't have the same kind of structural support that Bridge Counseling and Wellness has, that they are having similar numbers in some cases. And that's really causing more people to leave the field. We're also seeing that sometimes telehealth sessions are being mistakenly paid at lower rates, even though their effectiveness is the same, and even though it's presented as an accident. And when that happens, it creates a lot of hours on chasing reimbursement. And our understanding is this is also something that's happening more frequently in behavioral health. And it's not just chasing reimbursement from lower paying telehealth stuff. It's also like delays and denials and contradictory rules that are really confusing in the kind of contracts we're seeing come forth as more carve-outs are happening and more things are shifting. And I think it's really important to point out that Louisville is one of the largest cities in Kentucky. And even in Louisville, people are having to wait for care. We just added last month 3 new clinicians, which helped us move through our wait list. And we still have 40 people whose only barrier to receiving treatment is that they need to use their insurance, and there's no one who can do that. So if that's happening in Louisville, the impact that that's having on rural Kentuckians is even greater. And I also want to point out that providers want to serve all Kentuckians. We want to be able to do that. That is important to us. The current system is making it to where it is impossible to do that. And that's why I'm here in support of this new legislation that's coming in 2026 for parity in Kentucky. Thank you again.
Good morning. Thanks to Representative Meredith and Senator Carpenter and all of you for having us talk about this very important topic. I'm Sheila Schuster. I'm a licensed psychologist, executive director of the Kentucky Mental Health Coalition. We're 43 years old. I'm older than that, but my coalition is 43 years old and represents 80 organizations involved with behavioral health, mental health, and addictions who are consumers, family members, providers, and advocates. Our coalition and its members have championed the issue of mental health parity for nearly 30 years. Why is that? Because mental health parity, if appropriately enforced, would guarantee that insurers make rules and payments around services to diagnose and treat mental illness and addictive disorders just in the same way that they make rules and reimburse those who diagnose and treat physical health conditions, heart disease, cancer, diabetes, or whatever the condition may be. So what's happening? Why is it important? I'm here to tell you that stigma is alive and well. Think about this. We have people, and I still get calls, even though I'm not practicing anymore. I get calls all the time with people saying, I can't find a provider. And I say, what insurance do you have? And they say, well, I work for so-and-so company. I have commercial insurance. And I say, well, go to your HR and find out who the providers are. And they say, I don't want them to know I have a mental illness. I don't want them to know that I have an addiction or that someone in my family who's covered by this insurance has a mental illness or an addiction. You know, we've heard for years that the labor unions or the big employers will sometimes say to their members or to their employees, hey, we're going to add a benefit to your health insurance, and you all can vote. We can either add oral health or we can add mental health. What do you think the outcome of those votes are every single time? Overwhelmingly in favor of oral health. And I have nothing against dentists and oral health. But everybody's willing to admit they have teeth. And very few people are willing to admit that they or someone in their family has a mental health or addictive disorder that's going to need insurance. That's what stigma does. And it is still alive and well. So unless we have legislative action that really works to ensure that insurers follow the rules, we're not going to be able to solve the mental health and addiction problems in this state. I'm not going to review the federal action, which has been much, but I want to congratulate the legislators of Kentucky, because I have worked with you all. I've been coming up here since 1978, so I have definitely worked with all of you on a number of issues that you all have passed to try to address this problem. In 2000, and I'm not going to ask how many of you were around here in 2000, but in 2000, the little engine that could, we passed House Bill 268, do not discriminate. That was our motto. And people would say, the legislators would come up and say, who's discriminating? And I said, the insurance companies are discriminating against people who have a mental health or addiction. They're taking advantage of the stigma. They were curtailing the number of days that you could be in the hospital and the number of outpatient sessions. They were lowering the annual and lifetime limits, things that were very obvious. And we passed that bill. We came back in 2016 to pass Senate Bill 192 to make sure that the addiction services were also covered. Because, you know, addiction is late coming to what we now call behavioral health. And we were very proud to bring that that full parity to both commercial and Medicaid plans. And then, as Representative Grossell has pointed out, we came to you all in 2021. Representative Kim Moser was the primary sponsor of that bill. And we passed the bill that, House Bill 50, that we thought was going to take care of the issue. It required the insurers to tell the Department of Insurance how they were meeting parity, because the rules are out there, but they're not following them. And as Representative Grossell has pointed out, we've not had the results from that we really have needed. And so we turn now to the Attorney General to really put some teeth into the enforcement. I will tell you, since I have such a long history with this, that after the euphoria of passing House Bill 268 in 2000, when nobody said we could, and we thought we had solved the problem, that over the years I thought, how could we have been so dumb? We never created the parity police. We needed an enforcement agency. We needed somebody to hold the insurers' feet to the fire to make sure that they were following those rules. And that's what we've been missing all along. I just want to remind you that even before the pandemic began, the incidence rates of mental illness and substance use disorders have been increasing. The old number used to be 1 in 5. We're now looking at 1 in 4 of us. Look around the room, folks. 1 in 4 of us, sometime in our lifetime, will have some period of time when a mental illness or an addiction problem is on the horizon for us. The wait time between the time of onset of diagnosis of a mental illness and accessing treatment has been found by NAMI, National Alliance on Mental Illness, to be 11 years. Think about that. If you were diagnosed with a heart condition, or my God, with cancer, you'd be dead. And fortunately, many of our people are dead through suicide and overdoses because they could not get the treatment that they need. So it's so important to strengthen the enforcement of parity law that's on the books federally and in Kentucky. We need to show insurers that they have to fully meet those laws, and there are consequences for those who do not. I think that BR 74 will do just that. And I want to remind you that we have tens of thousands of Kentucky health employees, Kentucky state employees, who have commercial insurance, and not only because they're state employees, but because they are dealing with lots of behavioral health issues, are having trouble getting the kind of treatment that they need, as Nicole outlined. So I urge you to look carefully at this bill. I think our Kentuckians deserve no less. Thank you.
Thank you all very much. I do have a few questions from members of the committee, and if you have questions, let me know. We'll start with Senator Adams.
Thank you, Mr. Chairman. You mentioned that you are experiencing clawbacks. Do you have to have any sort of pre-authorization before you administer services?
We do outpatient mental health at Bridge, so we have far less of the pre-authorizations. We're seeing that these are happening sometimes because someone has a primary insurance and then they also have a secondary insurance, and even though we are billing under the primary insurance, there's a conflict that sometimes causes clawbacks, and then no one will agree to pay for it. And then we have to take action on this within a certain time period, the initial time period. And it seems interesting because the provider's time period, and again, when I say provider, I'm talking independent small business provider here, our timeline seems to be different than the clawback timeline that insurance companies can take from us. And that seems to me like a disparity in power.
And if I might add, sure. Anecdotally, I had someone bring this issue to me, which is why I'm here before you, and I've learned a ton about the issue. The clawbacks are happening even in prior authorization situations where they have, in fact, offered prior authorizations, and the clawbacks are happening up to 2 years from the date of service.
And I haven't, please excuse me, but I haven't read the legislation. Is there any, does it speak to any time frame on these clawbacks that we can stop them after a certain period of time?
Senator Adams, it doesn't set any timelines. What the legislation does is to say to the insurers, show us how your policies with regard to doing behavioral health, that's mental illness or substance use disorders, are the same as what you offer on the physical health side.
Yeah.
So it's at a par with or equality.
Yeah.
I would challenge the insurers. I don't hear about clawbacks over on the med-surg side. I would be curious. We could get that data if we had those reports.
Thank you. Thank you.
Representative Camuel.
Thank you, Mr. Chair. This is a really complicated issue, and I just want to say that I have so much respect for what you do. And Representative Wilner, we've had several conversations, and I want to say thank you so much for taking time to talk with me about this bill. And I'm going to take a stance that may be not quite as popular as some may hope. I think this, reading through the legislation and trying to understand what it does and how it can benefit Kentuckians and open up avenues for access to care and reduce barriers, I am not convinced that this bill does it in its current form. I have a couple of questions, and if I may, Mr. Chair, I'll try to go quickly. One question I have is, are preventative mental health services covered in this bill? Anything preventative? Will you just tell me which section?
Well, I don't know that they are specified, but anything that is covered by the insurance policy, which would include screenings and prevention, would be covered and would have to be covered at parity.
Okay, thank you. And so then that helps, because as I was trying to read some of the specific language, I was like, wait, is it assuming that a condition already exists? No. The other concern, or one of the other concerns I have, is we're getting ready to see massive increases in everybody's policy. Like, I think we're headed into some dark waters, I think, when it comes to the cost for premiums, the cost to receive services. How does this bill ensure that cost-sharing requirements that are in it won't make coverage unaffordable? And let's just look at the cost-sharing part of it, and then we'll look at opportunities for litigation.
If I may, thank you, Representative Camuel. Very interesting points you raise. I don't believe that that's at the heart of what we're getting at. We're simply asking for the Department of Insurance to do their job and provide the reports so that we can better measure this and then perhaps take additional steps with legislation to address mental health as it relates to citizens of the Commonwealth. I think that, this really is speaking to Kentuckians not getting the care they need currently, and we want to get a better handle on that and make sure that the Attorney General is able to enforce it with the insurers so that the laws on the books today, both federally and state, are being complied with.
If I may, I'd like to add that our premiums and our copays have been raising anyway. They're raising. And in addition to that, a therapist in Kentucky makes less the insurance CEOs and the executives are making more in a single day than the therapists in Kentucky are making in an entire year. So if better oversight can be achieved, perhaps we can rebalance that system a little bit.
Thank you for that. And if I may, Mr. Chair, and I appreciate that, but I think with the additional oversight, there comes additional costs, but also confusion. And this is where I've really struggled on the bill. And I was trying, or the current draft. And I'm glad to know it's open to changes. I was trying to think of an anecdotal way to try and understand what this bill does. And the way I see it is this bill creates additional oversight for the Attorney General for the Attorney General's office, which means it's going to take more time, more people, more processes. But if you're the client, if you're the patient, and you're not able to access care, what do? Well, you're going to call the insurance commissioner. That's the state agency that regulates insurance. You can also now, under this bill, call the Attorney General, who also regulates insurance under this bill. Or the other one is the private right of action, which means you can just skip over the first two and just sue. And some people may say, oh, great, it's more options, we can get more help. But really, here's what I think this bill will actually create. And I am so open to having any conversations with everybody about this bill. But what I think really happens is you're going to call the insurance commissioner and they say, we're investigating this insurer's practice. Well, then you call the Attorney General's office and they say, we're also investigating, but we interpret this law differently. And then the insurer says, we're following the commissioner's guidance, but the AG says we're wrong. So who do we follow? And then meanwhile, the individual still can't see the therapist. I just think it's creating more layers. I think it has the potential to create more layers and prevent people from getting the care that they need. And I want to say, and Rep. Wilner knows, I very much believe in mental health parity. I'm not sure that this is the avenue that we'll take. So in other states where there are multiple agencies that are regulating insurance, it's the same thing that's happening. You've got patients who are getting caught in a bureaucratic whipsaw, and they are not able to get the service that they need. They are not able to get the help that they need. And I'm afraid that that's what this bill does. So that's I think if the Department of Insurance is not following parity or not saying that they're not able to, I think one of the things that we need to do is look at why or ask the questions. And I'm sure you all have done that. But legislatively, why don't we first, before we bring in another entire constitutional office, why don't we give them the tools that they need, find out what they need? Do they need more people? Do they need more resources? What do they need in order to be in compliance, or to be providing the reports, the information that's needed? So that's my bid on that. So thank you. And thank you, Mr. Chair.
Representative Lockett.
May I respond to that, please? I just would like to say thank you again for your concern, Representative Camuel. Our job is legislative oversight, and if we have a department that is not doing what we have charged them to do, then it is our responsibility, in my opinion, to come back and strengthen that, and that's what we're intending to do. Right now, providers are just saying, we just want the Department of Insurance to do their job. If they need additional staff or resources to do that, we would love to hear it. They just provided testimony last month to this committee and have not raised that concern as far as I'm aware. And so this is the essential next step. It's been over 2 years since House Bill 50 was enacted, and the problems and the disparities continue to grow.
Representative Lockett.
Thank you, Mr. Chairman. I actually kind of want to piggyback off of what was just said, but I have a couple of questions. One, just for clarification, if I'm reading the bill draft correctly, does this bill add substance use disorder to any type of coverage, anything at all?
It's already covered. We were just clarifying because the bills that have been passed in the past have included substance use disorder, but we wanted to make sure that the insurers were not dodging that. But it's not a new addition. Those policies have been covering substance use disorders in the same way, whether they're meeting parity or not. They've been covering substance use disorders already.
Okay. And as you know, too, and again, kind of piggybacking off of what was just stated, anytime you add, whether it's coverage, whether it's administratively, whether it's processes, anytime you add anything onto an insurance premium, anytime you add anything onto an insurance company, whether it be coverage, whether it be you have to do this report, whether it be we are going to require you now to submit this, this, and this, you are going to add to insurance premiums. There is no way that does not happen. And I'm not saying that we shouldn't, but what I want to know is, and kind of what was just asked, I believe, was we need to see a study. We need to see solid numbers that say if we're going to add to premium costs, this is the projected cost that we're going to add to it. And you know, honestly, I'm not into, and I don't care how much people are making. That's a great point, but that's not our concern here. Our concern is coverage and how much that coverage is going to cost. So going forward, I would ask you and suggest to you that if you bring this bill back to show us this is what it's going to add to everybody in the Commonwealth, how much it's going to add to their premium, because it's going to. We just need to know how much.
Representative Lockett, if I may respond to that, as the chair of the committee, I would say this. I do believe there was a health mandate on the bill from last year, if I'm not mistaken. There will be a health mandate on this bill. I have a policy as chair of this committee that no bill comes before this committee for an actual voter hearing in the actual session without a health mandate attached to it. So we do know those numbers.
And if I might just respond, when we did the House Bill 268 in 2000, we got a $15,000 grant from the American Psychological Association, and we hired an actuarial firm to do that, because everybody said the testimony against it from the insurers was the sky is going to fall. It's going to put premiums completely out of reach. And my long-term memory is that it was less than 1% increase. And that was across the board. Never had parity here before. I mean, we will follow the chair's rules, obviously, and follow up on that. But that was the case in 2000.
And respectfully, I would like to add that almost anything would raise premiums, except for if we actually enforce these things and have a financial fine attached to it, that could pay for what we want to do. And it has already had a huge impact. What I'm trying to tell you is that the heart and soul and all the time and energy that I put into building this practice that is mission driven and serves our community is at risk. And that's not just me, that's happening all over this state. It's already an issue. I know I'm speaking out it passionately, but thank you for hearing me, because this is already an issue. And this excuse about insurance premiums raising, we've heard our premiums at our business raised 24% for our employees this year by the same companies who continue to drop our rates. This excuse does not fit from a provider's perspective. Thank you.
And I want to add one last thing, just to say that we are not asking for any additional coverages. The laws exist on the books and are just not being enforced. So I see no reason why this should cause insurance premiums to go up from where they stand today.
Representative All.
Thank you, Mr. Chairman. One of my two questions was asked by Representative Lockett, so I know it's scary for him, so I'm going to go to question number two. Representative Grossell, you said that there would be a projected cost of about $300,000. I know we're not in session. I know we don't have a fiscal note. I was reading through the stuff. I could not figure out in the draft bill where that actual $300,000 cost. So could you kind of provide me a little insight? Is that in the enforcement agency piece with the Attorney General? Is that the new board and the administrative cost of the new oversight board? Just kind of high level, where's that $300,000 projection coming from?
Yeah, thank you for the question, Rep. All. It's preliminarily to hire 2 paralegals for the Attorney General's office to make sure they do diligence with this issue. And the Mental Health Advisory Task Force will be meeting virtually, most likely no expense there. In the case that they have to convene in person in Frankfurt, they would be reimbursed for mileage. So no payment or anything. They would be serving as volunteer experts in the field, helping those paralegals and the Attorney General to identify cases that they could then go after. And I agree with what Nicole said. I mean, we don't have it written up this way right now, but it would make sense for us to have some of the fines collected in the enforcement pay for the program. That would definitely cut down on the cost to the General Assembly. Do you have anything else, Rep. Wilner, to add?
I think you covered it really well, but I do just want to add that this advisory committee or advisory board is advisory. They're not enforcing, they're just bringing the subject matter expertise to the AG's office.
Okay. And just thank you for that answer. That answered that. And then I understand that the Department of Insurance hasn't proactively maybe come forward and said, this is what we need to enforce it. I'm just asking if they, since we're still in draft and exploration mode, if they were open to having more employees or an enforcement agency or people in that department that already oversees this with that same dollar and or fine, would you be open to then maybe shifting the bill back to the Department of Insurance with that supporting fiscal note and the new monies to help them actually hire people if that's what they needed to do the enforcement?
Open to the conversation, most certainly. I don't know that they are interested in pursuing it. Otherwise, I think they would have identified to us that they need additional resources. Okay. I am open to it. Our enforcer is the Attorney General, and so I feel like our trust has been broken. We've already, been lenient, given a couple of years here, so it's going to be hard for me personally to really consider that seriously without some very serious conversations before session. But thank you.
I appreciate that you're open to it. Thank you very much.
We got 3 other members with questions right now. I was going to hold it at the 3 because we need to move on. And then I've got a brief industry response. So we'll go to Senator Smith right now.
Yeah, and I'll just be really, really brief. This does 3 things that I can see. Basically enforces the laws that are already on the books. Doesn't really require anything from us as far as an increase for insurance, because it should already be being done. And then it gives the AG the tools that he needs to be able to enforce existing laws. So that's just my takeaway from looking at it and wanted to voice that. And I'll yield my time back to somebody else, Mr. Chairman.
Representative Gooch.
Thank you, Mr. Chairman. Of course, I've been dealing with this issue a long time, and I think that it sounds reasonable to say that we should have mental health parity or whatever, and I understand that, but I think that my experience looking back is that this is an industry that I think overcompensates, overtreats, overprescribes. Look at our schools. Half the children out there have some type of a condition. It's some kind of 3-letter condition or whatever, and that becomes their disability. And now the educators have to look at them and consider their disability in how they accept behavior or whatever it is, because their disability may cause some particular action or some way they act out. And our kids are, in my opinion, I'm not a professional, but they're way over medicated. And we've done that over the years. And I think that my opinion is that the mental health industry, although very valuable, a lot of people need them. I think they believe that we all need their services. They don't think any of us should operate or go on without counseling. And when the counseling starts, I never see it end. And so I think that it's just my opinion. You're going to have to change it, but I just believe that can really easily be an overutilized service that has to drive up cost, because there's just no way around it. So, thank you, Mr. Chairman.
Representative Hancock.
Thank you, Mr. Chair. 2 quick questions. Does the AG, what are the difference in the resources you'd be giving to the Attorney General's office versus the Department of Insurance? And is the AG, have you spoke to the Attorney General's office about how they are going to be able to regulate this bill?
Yes, I have spoken with the AG. In fact, Representative Wilner and I have been on a couple of calls with them. They are willing to, whatever we ask them to do as the legislature, they are willing to implement and follow through with. And the cost is something that their office helped identify as a necessity for this. And so we would love to also seek the appropriation for the funding to run the program and not just pass the bill unfunded. I appreciate the question. I have not personally had a conversation with the Department of Insurance. I'm not quite sure that they have the ability to enforce this in the same way that the Attorney General does. And that's the step that I think is most needed.
Okay.
Thank you.
And one other question, if I may. How does this bill, I think the real issue with mental health care, in addition to the insurance, it's just so complicated, is the access to care. The preventative, the screenings, those types of things I think should be a focus versus policing something that doesn't exist. When we don't have the professionals that can even bill out, because we've got people on wait lists coming in crisis, which I'm sure is a bigger issue, I feel like we need to more go upstream. And I don't feel like this bill fixes the core issue, which is access to care.
Go ahead.
Yeah, I think, excuse me, in the same way that the stigma is there, I think people are reluctant to go early, unfortunately. And we know that early intervention in any of these mental health or addictive disorders is really the key to more effective treatment and so forth. What we're seeing is that the lack of access through insurance is creating a class system, and it's true all over the country. So the people that are the poorest that have Medicaid actually have more access to more services and more types of professionals than anybody else except the very wealthy who can pay out of pocket. The truth is that you cannot get in to see a privately practicing psychiatrist, because they're the fewest in number, particularly a child psychiatrist, unless you are willing to pay out of pocket, except for those that are working at a hospital or in the comprehensive care centers and so forth. So the people that have been squeezed the hardest are the people that have insurance. And that's why I brought up the state employees, because obviously they have commercial insurance, and I think it's 1 out of 18 Kentuckians works for the state or whatever it is. So those are the people that Nicole is trying to fit into her practice. And what we're seeing, and I think she described this, is providers are saying, I spend most of my time hassling and fighting with an insurer and not treating my patients and answering their phone calls and making, adjustments for them and so forth. I'm going to go self-pay. So it used to be just the psychiatrist, quite frankly, and then it was just the doctoral level psychologists, such as Lisa and I. And now it's mental health providers across the spectrum. And I think Nicole said that there were a number of people in her office that said, why should I go through this hassle when I can make the same amount of money working half the hours and not have the hassle? So that you're right about the access, Representative Hancock, and whether the parity will fix all of that, but at least it will give the providers a reasonable expectation for stability and for expectations, and not to have the up and down that Nicole and other providers
are If I may add on to that, the provider that brought
Vanessa,
this...
I hate to cut you off,
okay,
but we need
no
to
worries.
move on. We got one quick comment. I've got an industry response. Dustin Miller, if you'd come towards the table to make your response. Representative Grossberg, go ahead with your brief comment.
I promised you, Mr. Chairman, would be under 30 seconds, and it will. I appreciate you all bringing this bill before us. It is important that we discuss parity in insurance reimbursement, but I think it's also important that at some point we have a conversation about the parity of legal protection, that behavioral health is equally as privileged as physical health, and that the relationship between a provider and the patient should be equally as protected as it is with physical health. Thank you, Mr. Chairman.
Thank you, Representative. Go ahead, Dustin, come up.
Thank you, Mr. Chairman and committee.
Thank you all.
Thank you.
Identify yourself for the record. Make your comments.
Thank you, Mr. Chairman and members of the committee. My name is Dustin Miller. I'm here today as a retained legislative agent for Anthem, Elevance Health, but you know them as Anthem. I had not intended to testify today, and typically you would see my colleague, Hope McLaughlin, up here who knows a lot more about this subject, but I thought it was imperative, as you all heard this testimony today, that it's important for you to know that Anthem is in compliance. Mental health parity is a federal law. We're in compliance with the federal law, and we're in compliance with the state law that you all passed as well. We submit the reports that have been talked about here today to the Department of Insurance, and we've had conversations with them about those reports. So I know that they are regulating that. I can't speak for the department. That may be a good follow-up testimony for you all to have. But it's important I did not want to leave here today with you all thinking that the health insurance industry, or Anthem particularly, was totally out of compliance with current law, because it's just not true. I can't speak to the bill draft. I haven't seen it. I will just say this. It's been mentioned a couple of times that this is a confusing topic. What people get wrong mostly about MAPIA, as we call it, or the federal law, it's not about reimbursement rates. It's about coverage limitations and how we offer those benefits. And that some of that was discussed here today. So, for example, if we offer a visit limit on a physical medical service, it's got to be the same on the mental service. You have to treat them the same. It's not about reimbursement rates and getting in the middle of those. This General Assembly typically doesn't do that, nor does the Department of Insurance. And that's not what MAPIA is really about. It's about making sure that you treat those benefits the same. Anthem is very supportive. Behavioral health and substance use disorder, we have lots of providers that we have in network with us so that our folks have options. I just didn't want to leave you all with the impression that the industry was just totally, negligent or, not in compliance with the law when it comes to mental health parity, because we are, and we feel we are today. Thank you, Mr. Chairman.
Thank you. Appreciate everyone for their testimony on this very complicated topic. Thank you all each for being here today. And I do want to say I apologize for my tardiness this morning. Myself and one of the other presenters that you will hear from today were stuck for over an hour in an accident on I-65 just outside of Smiths Grove this morning. So we had to race up here from there later on. At this time, we'd like to call the folks from Kentucky Farm Bureau to the table. If you all would come forward, please introduce yourselves for the record, and then you may proceed with your presentation.
Good morning, Mr. Chairman, members of the committee. I'm Paula Smith. I'm Vice President of Legal Services for Kentucky Farm Bureau Insurance Company.
Anne Marie Franklin, Governmental Affairs Manager, Kentucky Farm Bureau Insurance Company.
John Sparrow, I'm CEO of the Kentucky Farm Bureau Insurance Company.
You all go ahead.
Thank you, Mr. Chairman, members of the committee. We appreciate the opportunity to share a few moments with you all today to give you somewhat of an update of what's happening in the state of Kentucky as far as the P&C business over this last year. We are excited to sit down. Again, it's an honor to sit down with you all. I think in times that I've sat before this committee, it comes before me that not only as our organization thrives diligently to serve the members of Kentucky fair and equitably, we don't always get it right, but we strive to do it the right way. I think that's the same thing that this committee and your representative, you representing segments of the state of Kentucky, that's exactly what you are doing. So I don't think it's much of a stretch to say that both of our organizations, our entities are here to serve the people of Kentucky, and we'll continue to strive to do that. So thank you for the opportunity to give you an update. And Mr. Chairman, if it's appropriate, we'll just kind of start wading in, and we do look forward to some questions. And at the end of our small chat, we'll have a brief video that we might want to share if it's appropriate for you. And if I can introduce some guests that we brought with us today, there's some significant people in Kentucky Farm Bureau that help us get things done, and they're with me sitting behind us, and I'll just briefly mention them. You've already been introduced to Paula and Anne Marie. We also have Rob Payne, our Vice President of Claims. One of the things, if Rob, if you can wave back there. Rob's been pretty busy, as is the organization, with significant claim volume. This is now in the fifth year here in Kentucky. That's not just for Kentucky Farm Bureau, but if you're in the P&C business operating in Kentucky, you've been pretty busy over the last 5 years. Chuck Osborne is our Vice President of Agency Support and Marketing. He represents approximately 425 agents, approximately 183 offices, serving in all 120 counties, the members of Kentucky. Jenna Stone is with us today. She's our Vice President of Accounting and Finance. I'll say with a smile, she makes sure we have enough money in the checkbook to take care of our members as they need us. Steve Hegg is our Vice President of Product and Risk Management. He is what is traditionally called in our industry our Vice President of Underwriting, and he helps us do that work. And then Dana Holbert's with us. Dana is one of our lawyers that helps serve the organization and the work that we do. So I just want to acknowledge them. There's several others, of course, with 700 employees serving in the capacity of Kentucky Farm Bureau back in Louisville and then across the state. So we're grateful for each and every one of them for the work that they do. And if I can get kicked off with you all, I just want to tell you that you may not hear much about it, but as I sit before you today, this body has done some fabulous work in legislation over the last 3 years, or last few years. I don't want to name just three, but over the last several years, and you're getting a lot of attention in the industry for the work that you're doing here in Kentucky. I know we have a small part of that with the team that sits before you today, but we get a chance to work alongside you all to really pass some legislation that has positioned a great service to our members. More directly, you might say, well, where's this chatter coming from? In our role, we sit down with Lloyd's of London representatives. That would be several syndicates that take on risk in Kentucky for catastrophic events. We also sit down with several groups in Bermuda. They always operate outside of the United States for tax purposes. So we have to go meet with them. And what we do, Rob Payne has joined us on those trips here in recent years to sit down and negotiate and talk about their investment with Kentucky Farm Bureau in Kentucky in the reinsurance space. So he's been able to share with them some of the legislative successes that we've had with you all, and they're amazed by it. They said that they don't, in all the insurance industry that they deal with all across the world, that Kentucky has brought to them information that they didn't even know existed. And so that's probably brought a lot of the chatter of the significance of our success and our ability to do good business in Kentucky. So thank you for that. Also wanted to make sure that we mention to you all, we have at Kentucky Farm Bureau, we have regional policy meetings, and much like why we were designed in the first place, Kentucky Farm Bureau gets its feedback from the grassroots out in Kentucky, and we feel like with y'all's participation and meeting with us in those regional meetings, that brings in your constituents along with us, and we can have a chat about things that are important to not only you all, but things that are important to your constituents out in the counties. And we just thank you for your involvement in that. And we do think that that continues to help us keep our boots on the ground, our mind on what's happening out in our communities, and you all get to hear it as well. So when we come in here and chat with you about it, about things we're trying to accomplish, you will have heard it out in those communities from your constituents. So we just want to thank you for your continued participation in that. A couple of events that I would like to share with you today that were significant to us and to your constituents and our members out across the state of Kentucky. We had the second largest loss event in our company history just this past March. A lot of people, it didn't really make the news much. It may have had a blip here or there or regional news, but we've been referring to it as the Owensboro or Davis County hailstorm. Well, the truth of the matter is that hailstorm affected every county in the state of Kentucky. It affected Davis County or the greater Owensboro area much harder than any other county. That's a big county for us. We have quite a bit of market share in that area, but that storm to date is approximately a $340 million storm. And in that $340 million for us, that represents about 2/3 of that happened in that county and some of the area around it. To give you a little more perspective, that was on a Saturday night, Saturday morning that event took place in March, and we were texting and communicating in the middle of the night about it. But by that next morning, when the sun was coming up, we were already squaring up with a local tobacco warehouse there in Owensboro, and by Monday we were building it out. And ironically, that same warehouse we had insured, and it had damage to the skylights where you were letting natural light come in. They were broken, and we had to fix them so the rain wouldn't come through into the work that we were going to do. But that massive warehouse, we started seeing members with car damage on Tuesday morning. It just took us a little bit of time to build it out, get the system up and running, and satellite working to run about 30 laptops. But we ran 18 lanes, up to 18 lanes of automobiles through that facility all at a time, and we ended up seeing approximately 10,000 vehicles over a period of, a month, 6 weeks. Of those 10,000, and forgive me, but I'm talking in rounds, but we had approximately 5,000 of those that we totaled from the hail. We had some people coming into that for them to be inspected that were frankly undrivable. They were having to roll down the window and drive in leaning out the window. That was a devastating event and very costly to the state of Kentucky, in that if you provide P&C business, particularly car, home, roof insurance in the state of Kentucky, you got hit pretty hard in that area because, again, the whole state got hit. Just happened to be about 2/3 of that loss as we're in every county. About 2/3 of that $340 million was right there in that community. Very proud of the work that we've done there in serving our members and the team rallying up to make that a palatable event for our folks. That was that'll be driving some of the cost of insurance prices going forward. And again, mentioning it didn't make the news very much. But then not long after that, about May of just this year, we had a significant event that did make the news. It actually made some national news, and it was over in London, Somerset area where the tornado led in. And it's interesting, it was a much smaller financial loss to our company. It's approximately, to this date, about $120 million compared to that $340 in the hailstorm. But it hit pretty hard. It made the news, and unfortunately there was some loss of life in that. So it's very emotional. That's a much more emotional loss. But nonetheless, it's still significant here in the state of Kentucky. So that along with just regular claims, and it's publicly reported what kind of claims that we'll have, as anybody can look it up and see it. But our company's budgeting without even thinking or acknowledging that we're going to have a big event like that, we'll be paying approximately $1.2 billion in claims as we just budget a regular year. And that's not unlike, Mr. Chairman, the event that you experienced. I understand that was a FedEx truck or something, but anytime I hear about an accident in the state of Kentucky, I just have a strong assumption that we've got one of the cars, if not both of them.
Both commercial vehicles on this one, I think, John, so you might be safe for this morning.
Very good, very good. But yeah, that claim up in Owensboro, that was about 19,000 claims for us. And then down in the greater London, Somerset area, that was about 6,000, about 6,500 claims. Ironically, when you hear about hail coming down, one of the things you can count for the insurance company is, Rob can tell you more eloquently, but as we had approximately 19,000 claims, we weren't to that because we were adding through the summer approximately 200 claims a week. And that comes on after people get out and start experiencing a little bit of rain, maybe a little bit of dripping. There is this phenomena, though, that happens, and we kind of refer to it in the industry as neighboritis. You know, if a bunch of trucks are working on some roofs, then my roof's probably damaged too. So we had a lot of claims coming in for inspection purposes, and we certainly took care of those and looked at those too. Some of the trends to be aware of for the state of Kentucky, it continues to be weather. I think every time I've sat before you in the last few years, I've talked to you about labor, about supply chain, and about the weather. And it continues to be an issue. We are budgeting going in. We're in budget season in our shop right now. So as we look into 2026, we're seeing some significant increases in labor rates for just automobile repair labor, property repair labor, and that will be driving, believe it or not, if you move labor rates just a couple of dollars, it's a significant impact when you have the claims volume that a company like us or many of our competitors that operate in the state of Kentucky, it does accumulate pretty high. One of the things I will make you aware of is fraud. That's always been an issue, but one of the things that we're seeing with the weather events of the last 5 years is we see manufactured loss. It's a fancy way of saying someone manufacturing hail damage or manufacturing wind damage. And I just want to remind this group that some might say, well, you don't have to pay those, but frankly, having that kind of damage, it is covered because it's vandalism. Now, it gets a little different if we know that the policyholder was the person that was the vandal, but it could be somebody else. And I certainly don't want to indicate who that could be, but there are there is manufactured damage on roofs that we will uncover and find, but yet we'll still have to end up covering it at some level because we cover vandalism. I was sitting in that tobacco warehouse down when we were in Davis County, and a car would come in and you would just look at it, and I'm not the professional, but we do have some appraisers and people that know what they're looking at, and they would look at it and say, well, thank you for stopping by, but this damage to this car wasn't created by hail. And ironically, that person would say thank you, get in their car and drive away as fast as they could. So that does exist in our industry. Both we see it a lot when the hail comes through or a big wind event comes through. It might materialize in just manufactured dents in the roof, or they are peeled up shingle in the roof that is very clearly not wind. But there's others that could give you a whole lot more information on that. But I will tell you that is a driver of cost. That is a driver of loss, which becomes a driver of premium for our industry, and just something certainly to be aware of. As I close out my comments, Mr. Chairman, I would mention to y'all we're right in the middle of deer strike season. That's a fancy way of saying that there are deer out, and they're plentiful in the state of Kentucky, and we get our fair share of them. We are expecting to pay to our membership through the deer strikes that they're going to have approximately $60 million. That's enough to drive insurance premiums on the automobiles. It's a very significant amount. We've been at that level for the last couple of years. As I look before you, many of y'all are traveling in, some from rural parts of the state. Just be very mindful. This is the time of year that we're getting a lot of them. Our claims guys, Rob, can tell you that I would guess just kind of in scratch in November, we'll probably do about $10 million in deer strikes in November. We're right in the heat of it. So October, November, and December will be our biggest months rather. And so be careful out there on the road, and just know that exists. And before Anne Marie, I assume you're going to turn it on, but we run this video. We just want to tell you how much we appreciate your role in our success. Frankly, your role for the people in the state of Kentucky. We're grateful for the work that you do every day. We look forward to answering any questions here shortly. If it's appropriate, though, we'll run this video.
John, you probably escaped the accident that I was in this morning, but I do think I passed at least 5 or 6 different deer on the side of the road, and I would guess that you all probably had a couple of those.
Yes, sir.
So you probably didn't escape those. Yes, you can proceed with the video.
Day of the storm, it's really calm that morning. We were talking about the things that we loved about living here, and we had no idea that within a few hours it would all be gone. The lightning, the thunder, glass break-in, it was horrible.
The storm started in far west Kentucky and tracked all the way across the state. Of course, when it hit the Somerset area, that tornado got on the ground for about 50-some miles and just hit the city of Somerset, and then went into the city of London, and just a lot of loss of life there. Just total destruction in those areas to where it was.
The roof was gone and the rain was falling down, and I was thinking, we're trapped in here. It's going to fall on us. And then right at the right time, we saw the blue flashing lights, and they got us out. I had no idea how bad it was. When I came back the next day, I realized how blessed and fortunate we were. And we're so sorry for other people that didn't make it, their families. We're so sorry.
So our community has lost, obviously a lot of property and several lives as well. And, as a Farm Bureau adjuster, we can help rebuild at least one part of their lives, which is their home. We want to come out and take the stress away from them on that part of things, their homes, their cars. We can't take away the loss of life, but at least we can maybe, help them rebuild a couple other major parts of their lives.
Luke and Seth came out that Sunday, met with us. Just that conversation with them
was such a relief. Told us we didn't have nothing to worry about. You're going to get everything you was insured for.
And I told him, I said, you're bringing hope to us. We can get through this. We can get through this. We cannot say enough about Kentucky Farm Bureau.
They were the first ones we got to Sunday morning. They're the Deatons. They are honestly one of the main reasons I've made it through the rest of the week. I mean, they were just awesome from the jump. Talked to them about their house and went over the insurance process with them. And then once we were kind of done with them and we were getting ready to leave, we held hands with them and we said a prayer. And it was another adjuster that said the prayer. And then once he was done, she just continued praying for me and the other adjuster. I think I've thought of that pretty much every single day. Almost every claim that we've went to since is just, I'm here for these people. I'm here to help them. I'm sure I would have worked just as hard, but it's nice to have that in the back of your head that these people who lost their home care about you too, that much, to pray for you and wish safety upon you. So
I can't say enough about the organization that Kentucky Farm Bureau is, that we make a promise to those members all across the state that we're going to take care of them in a time of devastation. And that's where we are today. We're dealing with that in that area of London and Somerset, and we're going to be there for those members. We'll be there till every claim is settled, and the commitment is there on our part as an organization.
Thank you for the opportunity to share that with you. We're very blessed to have a strong communications division in our organization. They get out and shoot that so we can tell the rest of the state of Kentucky, or show the rest of the state of Kentucky what happened in a community just on the other side of the state. So that is a big day, and I do appreciate him sharing, having participated in several of those events, all the way to I think about the 21 tornado. When that happened on a Friday night, and by Saturday we were standing on some ground that had no buildings left, talking to two people that lost their brother-in-law and sister on that same farm, and the emotions that come through there, and quite frankly, it drives me regularly from the beginning of my time in this Farm Bureau 36 years ago, when I started finding the reason that I was really here, and it was to provide that service in somebody's time of need. So that's been one of the things I think I'm very proud of our organization that we're able to do. Not perfect at it, but we've got a passion for it. So be happy to answer any questions, Mr. Chairman, at your time.
John, thank you all and your team very much. We appreciate you all being here to make the presentation. Do have a question from Representative Pollock.
Thank you, Mr. Chairman. Just a comment, not necessarily a question, but you shared about the hail damage. You shared about the cost of that, but also I think an important point of information on that hail's damage of $340 million happened in what, less than 3 minutes maybe?
2 minutes and 12 seconds. It was like running the Kentucky Derby.
Yeah. Yeah, so obviously we are getting our share of weather. When you talk about the 70-mile-an-hour winds, 2 or 3 years ago, just a huge impact on what we're dealing with here, and obviously the floods and the tornadoes. But I just wanted to share this one point and thank you for the comments and sharing what we're acknowledging and getting accomplished here in Frankfort. And you're exactly right. We're being noticed throughout the nation as far as INCOIL and some other organizations and associations and what we're trying to do, and that's consumer protection. And a lot of our bills we've passed the last few years, and we obviously take interest in that, and dealing with, obviously, from the company standpoint, the wind hail deductibles now, a lot of those type of things that we have to look at and talk about and bring to the table to kind of somehow offset some of the cost of our premium dollars to, obviously, our customers and our constituents. So appreciate your work. I love working along with your team. Obviously, and there's others in the room here today that we're coming all together at the table and having these conversations to be the best we can. And I certainly appreciate your leadership and what's going on here in the state of Kentucky.
Other questions from members of the committee? I would just follow up on what Representative Pollock said. You know, I have heard those comments that you made to the committee today, and I wanted the committee to hear those comments about not what is just happening in the state of Kentucky, but what we're doing here is looked at on the national level and on the international level, because the reinsurance marketplace is such a huge part of what's going on with our rates and things. And I know members of this committee understand that we have done a lot in the insurance space over the last few years, especially in the property and casualty space. And sometimes it feels like it's a futile effort because rates continue to climb and things like that, but we continue to have this weather. But for the work that I think members of this committee have done working with the industry, we would have seen a much worse situation than what we have. And I wanted members of the committee to hear and understand that today from the comments that you've made. And so I appreciate you bringing those to the committee, John, with regard to that, because though again, it's not always a fun thing to talk about, it is an area that we're making a difference in. So thank you. Representative Gooch.
Thank you, Mr. Chairman. And I don't know if we have time for a comment on this or not, but I know of that $300-something million, you experienced a lot of fraud with contractors coming in and overcharging people and telling them things were covered when maybe they weren't covered. And do you want to comment on that at all?
At a very high level, just pretty much what you just said. We just keep an eye out for it. There's a lot of good people in Kentucky. There's a lot of good insureds. There's a lot of good contractors. We're blessed to have the service we've got. Unfortunately, though, you have some bad players, and it could be as much. Forgive me, I don't want to indict anyone in this, but it could be anyone that commits the fraud. It could be an insured. It could be a contractor. It could be, just a bad person just wanted to cause damage. But we cover fraud, we cover vandalism, and we should. But it's just a shame when someone takes advantage of an event that affects so many, and then they try to gain from it. And I just wanted to, I guess the point I wanted to make sure you all knew is, even when fraud happens, and we know it's fraud, oftentimes we're covering that loss because of vandalism. And we may not be able to find out who did it. But in today's environment, there's Ring cameras, and we have actually had neighbors. You just go to a neighbor if they got a Ring, and you can see somebody up there doing something to a roof. Now that's rare that we can actually get that, but that is in the industry. And by the way, it's not going to change the world, but it is a frustrating piece when you're really trying to do what's right, and you try to and you get taken advantage of. But thank you for bringing that up. I couldn't sit and quantify the dollar amount because it's hard to. It's kind of hard to do.
All right. Thank you all very much for the presentation. Again, members, thank you. Oh, Senator Girdler, I didn't see you over there.
I just got one question. Wind and hail is covered and insurance premiums don't increase because of a claim. Vandalism is one of those things that, is the industry considering that one of those cat losses? Or are they considering it a vandalism loss?
Well, certainly if it's a vandalism loss, that's how then the insured is not going to be that wind and hail coverage is that's more into, this is when you do vandalism or things like that, insurance premiums increase for that individual in the industry as a whole. I would worry more about that vandalism claim because some roofer got up there and decided to knock some hail holes in the roof, and that's what you're happening. So it's not the insured's fault, but are you still going back to wind and hail? That's the thing that I would have a question about that as a claim. And I think we would want to look at things like that, but we don't really charge for the different. We really charge for, as I hope most of the industry does, it's a loss, and it's You know, it's back to, it's one thing to have one vandalism loss, it's another thing to have 3.
Yeah.
In other words, it all kind of depends on the individual risk, but I understand what you're saying. It's not fair.
Yeah, we have statutes in our laws that says you can't increase a premium based upon a weather damage claim. That's not a weather damage claim. That's a vandalism claim. But it's included because of the weather. So, and I'm only just looking at I'm not talking about Farm Bureau. They're all does. Everybody.
Right.
It's all totally different. But that would come back to haunt that. When they go to next door to try to buy insurance, they're going to say, well, you got a vandalism claim. Well, you can't turn them down for a weather damage claim. So that's the only thing I'm looking at.
Well, I think what you're going to run into is what's a true vandalism claim versus what is a fraud claim associated with a weather claim.
Right.
And those two things are not going to equal, and that's going to be left to a matter of interpretation. I mean, proving, obviously, if you can prove a fraud claim as a part of a weather claim, then you would have recourse for that somehow or another, either to go after an insured who did it or a contractor who did it or those types of things. But again, how often do you have the ability to prove those things when you have a catastrophic weather situation versus a true vandalism claim where somebody comes out and vandalizes a piece of property when there's no other thing going on? And I think that's a matter of interpretation and how to figure those things out, Senator.
Yeah, and the fraud thing is the big thing.
Mm-hmm.
And we got to get our county attorneys and our Commonwealth attorneys. That's where we're lacking at more than anything. We got to go after them.
Mm-hmm.
And we got to put some teeth into that bill that we put in. And so it would help us a lot.
Hold your horses, Senator. We might have something in the works.
All right.
Representative Smith.
Yeah, real quick, Mr. Chairman. John, thank you for what you guys do. The structure that you have in our communities. I know you've been down in my district. That touched me. That's part of my area. And the response that you've done is I call it a blue standard. You're actually a foundation for our community. But how you're structured on bringing our people in on your boards and how they're involved in the community, it's a great asset. Farm Bureau is to our area, and I want to thank you.
Thank you.
All right, thank you all very much. We'll move on to our next presentation. Always happy to have you here, John, and all your Farm Bureau team.
Thank you.
Jim, Billy, if you all would come to the table. I think you all do have a PowerPoint presentation to pull up there. Sasha will help you with that. Then if you all would introduce yourselves for the record.
Can do. Thank you, Chairman Meredith. Let me turn this on. Jim DeCesare, I'm the Executive Director of the Bluegrass Community Bankers Association.
Yeah, and I'm Billy Bingham, and I'm president of United Southern Bank in Hopkinsville, and I'm also president of our Bluegrass Community Bankers Association.
We had a movie called Step Brothers, and now we've got in front of us brother-in-laws.
Yeah.
Jim, good to have you back with us.
Glad to be here, Mr. Chairman, members of the committee. It's been, I think, 8+ years since I sat before any committee in the General Assembly, and I'm happy to be back here again. And yes, full disclosure, I took over the Community Bankers Association about a month ago as their executive director, taking over for Gary Brody, who served the last 5 years. He was a community banker from Franklin, Kentucky. He finally retired. Been working with the community bankers for the last 3, 4, 5 years in public relations and marketing position as a client. And then they hired me this year to take over their executive director role. And it just so happened that my brother-in-law became the president of the board at the same time. So he likes to tell people that he's my boss. But actually, it's his sister that's my boss.
Yeah.
So just clarify that. If you don't know who the Bluegrass Community Bankers are, we serve community banks throughout the Commonwealth. You have a community bank in every one of your communities, and those are the folks that we represent on a day-to-day basis. Our banks are deeply rooted in your communities. They do a lot of good things for your communities, and our mission is simple. We want to promote an environment where community banks flourish within the Commonwealth. And we want to thank the General Assembly for all their support over the years of community banking. I know Representative Meredith, you've had us here before in the past, and each year we come here to thank you all for the support that you give community banks, and we couldn't do it without you all, and we do have some things that we want to talk about today. Obviously, community banks, they drive local economic growth. They provide financial services to small businesses and citizens within your communities, and they support community development initiatives, big and small, and that's not anything that we want to take lightly. Billy, you want to add anything on that?
I just do want to say that I have been a community banker since 1987 at 3 different banks, and so I do appreciate the support that we have received for community banks, and we do try to participate in our community and support economic development. I serve on a couple of economic development boards and have for a long time, and so it's an important part of what we do is serving our community.
And I do have another role in Representative McPherson's district as an economic developer. And, without our community banks supporting our economic development initiatives, we wouldn't be able to flourish as much as we have in Simpson County in particular in this case. But also, we're here to talk about some of the things that we have some concerns about as well. And the main one is the credit union acquisitions of community banks. As you know, credit unions, they operate under a tax-exempt status. And there is a trend now where that some credit unions are out buying community banks now. And that's a concern for us because that does reduce tax revenue for communities, but also it puts our competition at an uneven playing field. And so, it also is a loss to the community as well when it comes to those decision making. When people are looking for loans, whether it's for economic development loans or personal loans, at community banks, you get those decisions made right there in your community, unlike some of the larger banks where they have to go through so many different committees to get approval. And so when community banks are absorbed into larger non-tax-paying entities, there's a huge loss not only for the state and the community, but overall for the citizens of that community and the businesses of that community. So we urge the General Assembly to review and address those tax advantages that enable credit unions to acquire community banks. Our neighbors in Tennessee and West Virginia have passed legislation barring community banks from buying state-chartered community banks, and we would ask that the General Assembly look at that as you move forward in this coming session and future sessions. The other thing is the credit union acceptance of government deposits. I'm doing some research on this, but they are credit unions are expanded to accepting municipal and government deposits, and of course, deposits are for community banks. They are taxable, but with credit unions, they're tax exempt. Again, it's another revenue loss for the communities and for the state. And then erosion of the tax base and government funds are directed to those tax exempt institutions. So we encourage the General Assembly to consider those implications moving forward as well. We believe that all financial institutions competing for government deposits should be subject to the same laws. In short, we have a lot of entities that want to be in the banking business but don't want to follow the rules of banking. And that's where it all comes down to. And Billy can talk about that a little bit as well.
Yeah, so I've been competing against credit unions my whole career, and it just seems very unfair with them not paying taxes. They're able to basically pay employees better and charge lower loan rates and pay higher deposit rates, and so it's tough to compete against when they're not paying taxes like we are. We pay a lot of taxes, so like Jim said, it's just something that we need to seriously consider changing, because the more community banks that go away, I just think it's going to hurt communities. Because we do make local decisions. We have local ownership, local boards, make quick decisions on a local level every day, and we make a lot of exceptions to make things happen. We make loan policy exceptions every day just so we can make loans to our customers and community. So I'm not sure how much that happens at credit unions.
Yeah, and I was talking with my counterpart in Tennessee last week, and he was telling me, and of course, laws are different in each state, but in Tennessee they have an AG opinion that when you become a member of a credit union, you're buying into a corporation, you're part ownership, and Tennessee law does not allow for the government to be owner of a corporation. So that's how they've stopped credit union government deposits in Tennessee. And, you know, I'm not, we're still researching that here in Kentucky to see how that works here. But the impact overall is that if credit unions are allowed to acquire community banks and accept government deposits, since they are tax exempt, it's going to decrease profits for community banks, leading to a lower state tax payment, altered investment. They might not reinvest in government deposits in the local economy in the same way community banks do. So that impacts growth and tax revenue. Job and wage impacts, obviously, that's kind of a gimme if community banks have to downsize because they're losing customers through you know, a tax-exempt status at a credit union, and of course diminished community support. Every community bank is required in the Commonwealth to reinvest in their communities, and they do that every day. You know, I was participating in an event last week, and it was sponsored by a community event, and it's not unusual for you to go to any event within your community and you see a community bank on a t-shirt or on a sign or in a ballpark or on a football field. And that's why we're here. We're here to support our communities. The other issue we have is revenue-based financing, and we think this is more of a consumer protection issue. Revenue-based financing is commercial financing where businesses sell a fixed sum of its future revenues in exchange for an upfront payment. Unlike loans, they don't have fixed periodic payments. Some RBF providers are seeking to operate without adhering to the same regulatory requirements that community banks are. Again, it's another entity coming into the banking field that doesn't have to play by the same rules as community banks. And we believe that, you know, there needs to be appropriate oversight and regulations when it comes to revenue-based financing. So we urge you to ensure that RFB providers are subject to appropriate regulatory oversight, including consumer protection. And this will help prevent predatory lending and maintain a level playing field in the financial services industry.
Yeah, so the regulations we deal with every day are just a burden when we feel like we try to do business the right way and take care of customers, and we're not predatory lenders, but yet you got these others who may be predatory lenders and they're not regulated. So it doesn't seem fair to me that we're abiding by all of these regulations as we should, yet we're competing with other companies and businesses that don't have to go by the same regulations, and even the credit unions don't appear to be regulated like we do. I haven't never worked for a credit union, but I don't see any signs of them being regulated like we are. When I talk to, we have some mutual customers, and it's not anywhere near the same.
And I would add that most of these revenue-based financing organizations are out of state. You hear their commercials on everything when you're watching sports or listening to the news. They are typically national organizations, and they are not fixed in your community like community banks are. So, you know, our core argument is just fair competition and consistent standards, and I'm not going to go through all this, but we just discussed it all. But we just asked the General Assembly to look at these issues to ensure that Kentucky's community banks can continue to thrive and operate in your communities throughout the Commonwealth. And, you know, we're here to partner for a stronger Kentucky, and happy to answer any questions that you may have. I know I went through this pretty quick, but I know based on past experience that when you get about an hour and a half into a committee meeting, people are starting to peel off, and I wanted to get through this pretty quick so we could answer any questions that you may have.
Thank you, gentlemen. I do have a few questions. We'll start with Senator Girdler.
Jim, I only have one question for you personally.
Uh-oh.
I can't vision you with long hair and strumming a guitar, because Brandon Smith told me you was a rock star.
I am a rock star, but I don't.
He plays the drums.
I play the
drums.
Yeah. Yeah, and the hair's been gone a long time.
I promise he had long hair and an earring when I first saw him.
The rock star he never got into it. I'm assuming you were one of the few Republicans here that was in charge of it or something of that nature is the way I took it from Brad.
I'll let Senator Smith address
All
that.
right.
I've known him for 20 years. He's never had hair since I've known him.
Well, he called him a rock star. I don't know. I just kind of.
I appreciate that.
One of the things that kind of, we hear for not for profit, right? I've got a big hospital in Somerset, Kentucky, for profit, but I've got hospitals, and I'm using this to get into what you're talking about. Then I go into the rural counties I've got 5 counties, and I've almost butt up to some of them here. Not for profit goes back to the consumer. For profit goes to the stockholders. And please don't play this back to Tony Wilburn at Cumberland Security Bank. I owe him more money than I've got. So anyway, my question is are we penalizing the not-for-profit because they're not paying for profit? And another question I have is on the part that says they're buying banks. Well, do we have anything on the books that says they can't buy banks, or any other state doing that?
Yes.
So other states are saying you can't buy banks.
Tennessee passed legislation earlier this year that will not allow credit unions to buy Tennessee chartered banks. So did West Virginia. Right. To follow up to your comment about the nonprofits, if you remember, once upon a time, credit unions were created for a specific group of individuals. Now, you can become a member of a credit union if you have a heartbeat.
Mm-hmm.
And that's the differentiator now. Credit unions have opened their membership to any and all, where once upon a time they served a certain segment of individuals. And that's what the difference is today.
All right. Representative Smith.
Thank you, Mr. Chairman. I take it that we're going to be dealing with this in legislation, so let's say that we are.
Yes, sir.
Is it possible that you having a parallel of, instead of saying he said, she said, having a parallel of what community banks can do and can't do, and then what the credit unions can do and can't do? Because, we heard testimony from the credit unions on why they're valuable. I'm sure they have a place in our communities. I know L&N is in my district, but I also have community banks in my district that I have relationships with. But I instead of going back in testimony and trying to put it together, is it possible to put it down so I could actually look at it and see what we're actually talking about on deposits, on what it happened in my area, a credit union being bought there in Bell County. I think that started.
Yeah, Middlesboro. Yes,
Middlesboro started this trend. And then I was trying to think, if I owned a community bank, why I wouldn't want to have that option out there to sell. So I'm trying to piece this as on a business side, but also I want to make sure that I make the right call legislative wise, because my community banks are important to me, and so is my credit union being having a presence in my area. So if I could see something instead of listening to it, saying, well, they told you wrong or you're not getting the right information, could we just see it on paper so we could have a chance to look into it ourselves to make sure? Does that make any sense?
Yeah, we can absolutely get some information to you that explains the differences. But I think, the main point that we're trying to make is that, credit unions are operating in the banking space, but they are not under the same rules and guidelines that community banks are. So, I could sit here and say, well, why don't you go ahead and make community banks tax exempt as well? Well, I'm not saying that, but if you're comparing apples to apples, that's not what we're doing today. But they're providing the same services, they're doing the same things that community banks do, but they aren't playing under the same rules.
I understand your argument. If I had it set down on paper showing the differences,
sure.
Because I'm not a banker, I don't have a background in the industry, but in making a decision, I'd like to know that I'm making the right one.
Yeah,
based upon what I'm looking at, because again, I have I lean towards the community bank because of my relationships and their presence in my area. So I don't want to be wrong in penalizing something if it's not there. You know what I'm saying? So I want to make the correct determination on it, and I think that would help me in understanding, instead of saying the other industry saying you haven't explained it right, or you saying they didn't explain it right.
I got you.
For us to see it.
And if it's, Mr. Chairman, if it's okay, we'll get that information and provide it to the committee for disbursement.
That sounds good.
Thank you, Mr. Chairman.
Representative McPherson.
Yes, so I assume that, so I think what you said, Jim, was right about, the used to credit unions was specific, maybe you was alumni of Western Kentucky or your alumni of UK or whatever it might be. Now they advertise a different. So when did that change? When did that law or when did that opinion change that they could do that?
I don't know the answer to that, but, I see commercials for a military-based credit union, and, it's basically if you know someone who was in the military, you can join. Billy,
yeah, I don't think the rule has changed. It's just not enforced. They just simply take anybody that comes in, basically. But it's still a rule. They have to have a common bond of some kind, but it's not enforced that I can tell. So that's the main problem. But if I could comment on Representative Smith's comment about the banks selling and the owners, granted, for the same reason that credit unions are harder to compete with, they can basically pay more for these community banks that they're buying. So, yeah, I guess the ownership in terms of money wants to be able to let credit unions buy banks. But, I want to think or hope that most community bankers would resist selling to a credit union. But ultimately, when the money's there, it's just hard to resist. But the bank ownership is a small percentage of the general community and population. So we're trying to represent the whole community to say that it's better for the community for community banks to stay community banks.
So with all that said, what I'm hearing, and tell me if I'm wrong, so the credit unions have a set of rules to live by, and now that we haven't had a real definite determination of how you become a member of a credit union, these credit unions are now allowed to buy the book of business is what they're really buying.
Yes, sir.
Because they're not buying the bank and saying we're gonna operate as a community bank. They're buying the book of business and moving it over to a different set of rules.
Yes.
But because we're not identifying the relationship more strictly, so if we identify the relationship more strictly, could that solve a lot of these problems? Because then the book of business might get smaller that you could buy. I mean, I understand capitalism and we want to be able to sell what we want to be able to sell, but you're buying it one set of rules and flipping it to another set of rules.
Yeah, it would help, I think, if just those rules were enforced, like I'm saying.
Identified or enforced. So one question back on the credit union side, if I may, Mr. Chairman. So is there any data to show what if a credit union would loan money to somebody that wasn't eligible to get that loan in a community bank? Is there any data showing that they have different rules because of their rules that you could get a loan, a car loan to somebody that would be denied at a community bank at a credit union? And I think that's going to be their argument.
Well, I would just say that I think that's going to be individual to every individual credit union, every individual bank, because everybody's got somewhat different standards for what their lending standards are and those types of things. So I don't think you could have a industry-driven version of that.
I can loan money to anybody they can,
I'm not saying
right?
I'm not saying could, would. There's
would.
a difference in could and would.
Well, I would.
Okay.
I think.
Okay.
Yeah, and I think Billy mentioned earlier that community banks have more flexibility than some of your bigger banks, and if it's a national credit union, they may have stricter standards. So but the one thing that credit unions can do, that sort of undercut community banks is that because they are tax exempt, they can work on their their loan percentage.
Yeah.
And I would just say, if I can make another editorial comment from the chair here, anything related to the tax exemptions we have no control over because those are federal laws and they preempt all state laws.
Yep.
Field of membership, we may have to have staff do a little research on. I think that's going to fall under federal regulations or law as well. And some of that may be preempted as well with regard to that. So I'll have staff look at that for us as well. But again, that's where it gets kind of difficult from us. And then the difference in the fact that they have different prudential regulators. Whereas most of your community banks are going to be regulated by the Federal Deposit Insurance Corporation. Most credit unions are going to be regulated by NCUA, so they have different standards set by their different prudential regulators as well. Makes that a little bit complicated, to say the least. Representative Ballman.
Thank you, Mr. Chairman, and thank you, gentlemen, for your presentation today. As somebody trying to learn this issue, I appreciate the knowledge. There's been some talk, though, about what's fair, what's not fair. I think you said just a moment ago that we do everything exactly the same, so we should play by the same set of rules. However, I think it's been made very clear that your profits go to shareholders, the credit union profits go back to its members, and by extension, the community. And that seems to me to be a very good model for the community, that those earnings are passed along to the members. I know that how do banks' earnings really compare to the amount banks pay in that local deposit tax that we're saying is unfair?
Well, yeah, there's local deposit tax, but also income tax. But repeat your question now.
I know, and I wouldn't expect you to have an answer right here in the moment, but I'm just curious. I can't help but wonder how this number that you're paying in this deposit tax compares to the amount that you're returning to your shareholders, and what the difference is there.
Yeah, I would have to research that. I think I understand your question now, but that would take some analyzing.
I'm gonna step in here and just say there's three different indicative taxes that fall under this, though. You have federal income tax that banks or bank shareholders would pay on their earnings. You have state income tax, which banks or bank shareholders would pay depending on what type of corporate status that they have. And you also have the local deposit taxes that would be paid on their deposits specifically, that are separate from any other type of income tax. So you have three different taxes, and again, that would be a situation that would be different based upon every bank, because it would be based on the income structure and the amount of income they bring in. I mean, obviously, at the state level, we would have a pretty good idea of what those numbers are, because we pay, a 5% corporate tax, I think, at the state level. So if they're a corporate entity, they would pay 5. If they're an S corp and a pass-through entity, they would pay the 4, going to 3.5 after the first of the year on the state. Each county or city could have a different deposit tax up to a certain number, but those would be stacked taxes as well. Both the city and the county could charge those deposit taxes without any offset in those as well. So you're talking about three distinct taxes that make a difference. The federal tax would be the hard part that's the hardest to determine, because it would be then based upon the tax bracket of the individual shareholder in an S corporation situation, or the tax bracket of the corporation if it was a C corp.
And I'm sorry.
But could well be, I think when you stack all those three taxes together, you could easily see something in the 20 to 30% range of earnings.
Excellent. Well, thank you, Mr. Chairman. I appreciate that answer, and thank you, gentlemen, for your presentation.
And I would just add that that's before the shareholders are paid, that the taxes are paid.
Yes, sir.
So, Senator Elkins.
Thank you, Mr. Chair. Couple of questions, like Representative Bowman. I'm kind of new to this committee as well, so I'm learning as we go. One thing I do know, in my community and in my counties, we have a lot of community banks and we have a lot of credit unions, and they seem to coexist now. And so I'm looking. I'm a business guy as well, and I'm a for-profit business guy. That's what my background is. Are credit unions buying community banks? Has that happened a lot this year? And how many times in Kentucky do you think there was a community bank bought by a credit union this year?
I'll take that one. So there's been one in Kentucky in the last year, and we've seen this trend accelerate probably over the last 2 years or so across the nation, where credit unions are buying community banks. So it's something we're trying to get ahead of before it gets too far out there. And so, as I mentioned, some other states are addressing the issue, but we are seeing a trend across the country where community banks are being bought by credit unions. And it's becoming an issue, obviously, because it's our competition to some extent. I think credit unions and community banks can coexist. They have a lane to stay in, and we have a lane to stay in. And as long as we're both staying in our lanes, I think everything's good. But now they're starting to merge over into our lanes and into what we do as community banks, and that's where we're seeing the issues.
A second question, Mr. Chair. Thank you, sir. In business, I was not crazy about competition either. I liked it for everybody else, but I didn't like it so much for me.
I like competition, just fair competition.
I don't like. I liked it when I didn't have any competition. That's when I liked
That's
it
the
best.
best.
So I understand competition, to be sure. And I have another question on and we talked about this before a month or so ago, maybe 2 months ago, about government deposits in credit unions as opposed to government deposits in banks. And in your presentation here, maybe the third or fourth slide, you say it's a potential erosion of the tax base. So they don't pay taxes on a government deposit. Credit unions don't. Do you?
Yes.
Yes, as far as I know, or is that exempted?
The
local
government
deposit
deposits
tax?
themselves are exempt.
That's what I was thinking. So,
however, the rest of the deposits by the bank are taxed.
Yes.
And so it's not a matter of the taxation specifically, but it's a matter of how the taxation differential between the two has a effect on the overall business models. And the unfair competition, I think, is what they would say there.
Yeah.
And so we lend out our deposits. So if we don't have that government deposit, we don't have that money to lend out to the community.
But the credit union does.
Yeah, I do a better job of it than they do. Right.
Because of competition. You must. So
Yeah.
I thank you, Mr. Chair. That's all I have.
Fair point.
Sounds good. Any other members of the committee have questions? Gentlemen, thank you all very much.
Thank
Appreciate you being here.
Appreciate you.
We are going to likely have a December meeting. Members will hear from us today on what that date has been. I think most of the members of the committee have communicated with staff on what is best for them. We have taken that into account. We're going to hit one of those dates that is the best for the most members of the committee. We have a reg that we need to deal with that we won't get until tomorrow, and with our committee being early this month due to the Veterans Day holiday, we're going to have to punt a little bit. We'll probably have another presentation or two on that agenda as well, but it will likely be short. Thank you all for being here. Do I have a motion to adjourn?